And you're basically teaching yourself to be okay with changing rules, or be okay with closing trades early, or be okay with taking profit faster than you should. And that's just not good for longer term results. So ideally, we try to reduce those thoughts. We try to not have these kind of scenarios where price goes really far in profit, comes back and then stuffs you out, and then you feel bad about it. The way I found to fix this for myself, and we'll go in depth on that. Welcome back everyone. So in this video I want to cover how to let your winning trades run. I mean, one of the biggest things we hear people say when they join our programs, and one of the things that people always kind of go back with when they try to learn to get profitable, is they try to let their winners run, but it always goes back against them. The trades go into profit, they try to kind of keep it, let it run for a while, then it goes back to break even, to their stop loss, or they end up closing a trade with no profit, or maybe even a small loss. Now that sucks, first of all, because you are losing all the profit you had in the market. So how do you actually let your winners run without having the risk of getting them to go back to break even or go back into a loss? It's a good question. In just a moment, I'll share with you here exactly how I do it, some tips I have to get out at the optimal levels in the market, and some kind of a different tweak on trade management that most people don't talk about online. I'll share that with you in details. But if you want to go more in depth into how to trade trends, how to ride the trends longer, I have a free training, it's going to be linked below. It dives into the indicators I use to trade the trends, also a few techniques on how to get in, how to get out. That training is free, so you can check it out. It's going to be down below the first link. Click it, get the free training, and you'll be able to see how I trade, get a bit of a more detailed view into this. But for now, I'll just cover the basics on how you let the trades run. And then you can check out the training below for more details and just go more in depth on it. All right, so let's talk about why the common principles of trade management tend to fail you. What do you hear online if you think about trade management? You hear, always aim for 2-to-1 reward to risk. Or you hear, get out when the trend stops. Like when the trend reverses, you should get out. Or you hear a lot of, oh, you should move your stop loss to break even, because then if price goes back against you, at least you don't lose any money. Your trade is covered. These are all decent techniques, but they don't really take into account how we operate as traders and how we think. Having a 2-to-1 target, that's cool, but it's very, very based on a number that the market doesn't care about, right? Who says the market will go 2-to-1? Or who says the average or the best move might be 2.8-to-1? Or it might be even like in some markets just 1.2-to-1 or 0.8-to-1. It could be a lot less than what you expect. So if you always have these targets that are based on these numbers, which by the way I still use myself sometimes, but they are not the main thing that I use for getting out of trades. Now, like I said, most people learn to get out when the market stops trending. So when you have a good uptrend, they buy. Then when it reverses, they sell. That's a good way to do it. I mean, it definitely makes sense. But who says that you're going to lose all your profit maybe when the market reverses? Or who says that you have a 3R winner, then it becomes a 0.2R winner when the market reverses? Like, these things are very unpredictable, because you could be being in a good trade that's been running and crushing it really far. And we'll get some examples in a minute here in this video. But think about the fact that you could be trading a longer term trend, it could reverse on you, then you still lose most of your profits. So it's not the ideal case to just wait for the trend to stop, because you could be losing out on your entire trade or a good chunk of your trade. And that's just not cool. So what I'm doing with my trading is I tend to take these principles and I really take them to another level. So the 2-to-1 reward to risk, yeah, it's cool. The getting out when the trend stops, we kind of flip that around. I'll show you in a minute. The moving your stop loss to break even, we do this, but only if it makes sense to do it. And we also scale into trades to make our profits even bigger. If you want to see these techniques more and how I combine them with indicators, check out the first link below. It's going to be the training I talked about in the beginning, where I'll teach you my indicators for trend trading, things I look at, how to look at the market context, how do I get in, how do I get out to really maximize my profit in that case. And you'll get to learn a lot of stuff that I won't cover in this video here today. So make sure you watch this one till the end, and then you get the training below to go more in depth on these principles. All right, so what's the ideal case scenario here of trade management? Well, ideally, sure, like money matters. It's good to have a bigger profit. It's good to always catch the best moves. Good to get out at the optimal level for money to go in your account. But the main thing I'm trying to reduce here with these techniques is I'm trying to reduce the feeling of, when you get into a trade, you see it go in profit quite fast, quite far, and then you think, oh, I should really stick to my plan and like not close this right away, I should let it run more. Then after, when it pulls back against you and then you stopped out, then you think, oh shit, should have taken profit a lot earlier on that move. And those feelings are bad in a way, because they bring you in a spiral. Like, the more you feel bad about what you did, when you did things right, like you feel bad about letting the trade run, it goes back against you, then you feel bad. So what that does for next time is, next time you'll think, oh, now maybe I should close trade early. Now I should tweak the rules and I should do something different. If you're always stuck in that cycle of, oh, you do something, then the market does something different, you're pissed off, then next time you do something different, that doesn't lead to good trading at all. That leads to bad trading over time. And you're basically teaching yourself to be okay with changing rules, or be okay with closing trades early, or be okay with taking profit faster than you should. And that's just not good for longer term results. So ideally, we try to reduce those thoughts. We try to not have these kind of scenarios where price goes really far in profit, comes back and then stuffs you out, and then you feel bad about it. The way I found to fix this for myself, and we'll go in depth on that, but the key principle is to create multiple trades per one position. I'll give you the theory here, but we'll go in the chart in just a second. First of all, that means you can add to your position, so you take more trades when the market pulls back. So you kind of enter in on more pullbacks. You scale into the trade, basically. And then here's what most people don't do, and it's kind of like the opposite way of taking profit when the trend ends. You reduce your size on market highs, on new highs. So when the price goes in your favor really fast, you have a big move, you can take some profit off. Not all of it, but some parts of it. Because we can never tell how far price will go. It could go and push really far and then you take some profit there. It could maybe push a little bit less, or then it goes and reverses after that. Whenever price reaches a new high or like does something really fast and moves really fast, you can take some profit off. We have to teach ourselves to not wait for the trend to stop before we get out of our position or before we reduce our size. We don't want to close when it's like back at break even. We want to close when it's back at the high in profit, or at least close part of it, because you don't know how far it will go. It could go more far. It could pull back and stop you right there. So the more you take profit along the way, the better you'll do overall in your trading results. Right, so now we are on the charts, and I want to show you how this works out in practice. So I've got a couple of trades here on Visa, other ones on MasterCard. Costco as well were really good runners recently. If I put this on the weekly chart, where I kind of tend to trade well, I tend to trade a lot these days, you can see price kind of on this one here. By the way, I have an indicator here. And I'll cover this in the training below. It's going to be the first link. You can check it out. So how to trade trends with this. It's really useful. Works out pretty well. So I'll go in details on how the rules work for entry, how you can get out, and those kinds of things. So check out the link below for that. We go in depth. I won't go through all the settings here and all the stuff, but you can go and watch that free training and get all the value below. For now, let's focus on these trades here that we have. So enter the trade above the high over here. Stop loss was somewhere below. And now price, you can see, pushes really far in our favor. It's 1, 2, 3, 4 bullish candlesticks. Now these are weekly candlesticks. So it's like 1 week bullish. It's like a whole month here only going up pretty much with no stopping. What it tells me is, well, you could look at the past. Like in the past, how often has this happened, right? You can look here. We have maybe 1, 2, 3, then it kind of slows down and die out, right? Here 1, 2, 3, 4, maybe 5 came back down, but not as big as this move over here. What that means is I want to take some profits right there. I don't want to wait till price pulls back over here. When price pulls back over there, actually I'm going to add more to it. I'll do plus on my sides. So I'll add more to the trade if you have a good setup on the charts. But for now, when price reaches new high, like this one, we don't talk about like any new high. It doesn't have to like just be a small high. It has to be like a very clear push in our direction. Then we'll take out some part of the trade. I don't know how many shares I have on Visa for now. I'm not connected to my account over here. But maybe I take out, say, 30% of my position. So 30%, I take it off. I have 2 more times I can take profit off if I want to. So if I see price goes back down, starts me out with my stop loss being at break even, maybe I'll get out. I'll definitely get out. But if price continues to go up even more, then yeah, maybe I can take some profit off again over here, right? As I see price move. And the key thing is you want to look at, of course, candlesticks. Like you don't want to take profits based on nothing. So it should be either like a big engulfing candle, like this one over here, big move. You see price really pushed in your favor. This one is also a good one, definitely. All right, you can see price pushed above, came back over here. We have a nice wick over there. Then it went even beyond that. So that's a good sign that we're probably going to reverse eventually. Let's have a look at even Walmart is a good example. Walmart's been just crushing it. I added to this multiple times. Over here, over there again, over here again. This is the most recent trade there. Over here, actually, we have more recent ones. Now, these have been kind of crushing it. Every time we pull back, I add to it when we have it set up on the chart. And that means it's been a really, really big push. And I don't want to wait till price stops me out over here to get out of the trade, because that's a 104. That's like a more than a $10 move. So it's pretty big. So what I'll do is I'll actually take profit when prices reaches new high, all right? So of course it's easy in retrospect, like you just look at the top, but in reality, when price moves like this, you see these big candlesticks here, big push, right? Okay, bullish, bullish. Okay, here we start to have some indecision. This is a bearish, kind of like a hammer. I might take part of it over here, take part off, right? But even then price reaches more, went higher even more. We go back in, enter right there. Prices pushes up, okay, bullish, bullish, no sign of going back. This is a bearish candlestick starting to get a little bit bad. I might take some part off over here, right? Not all of the trade, but maybe a part of the trade I just took. So here, if we have, let's say 100 share of this, then maybe I take out 30 over here. Maybe I take out 30 more over here. And I add more 100 over here, right? Okay, price went above a little bit more. That's good. These bullish candlesticks that are really big like this after a bearish one tend to also be some exhaustion candlesticks. So they're like price, so the buyers try to push it more, but they're really not having enough effect to push the price really far. So this could be a sign of price will resume. Continuing here, okay, boom, one more trade over here, right? We add to it again. See, we don't get the perfect exit, but we actually exit when price is at the extreme point, at the top level. That means we have more profit getting out that way than waiting for price to reverse back at our original entry or even at our stop loss. And it feels a lot better on the mindset too. Okay, price goes up, 1, 2, 3, bearish again. Could be time to get out, or it could be, yeah, definitely. So 2 bearish candlestick, get out part of it here, take some profit. Then price pulls back more. Okay, we can add to it again, and boom, continue. So what this does is, of course, over time you can take some profit. So you have one over here, over there. Some moves you kind of close your position a little bit. And at the same time, then you kind of add to it more. You end up having a good size on your trade here overall. And it means that you can always take back some more. You have some that's rolling. And then we use this indicator here on the side to confirm the bigger picture trend down below and the lower kind of more short-term trend over here. So if you want to see how this works, link below is going to be in details how this works out. We'll have a look here at Costco, which was another good one. Costco's been having a lot of setups. And if I go on the daily chart, we have the same couple of setups too. This is more of a realistic scenario because you have the whole moving average here going to green, then going to red. So we can add over here, we add there, and so on, add there. But as price reaches new high, see when we have a gap, that's a good time to definitely get out, right? I'm not saying this in retrospect here, I'm saying this because you have a big gap up. Same thing with Netflix, right? Netflix has been having big gaps up, Spotify as well, Netflix. I mean, when you see these gaps, it's definitely time to take out part of your profit, right? Gap over here. See, next day we came back down. That's a good sign. So we want to be able to get out over time. You could have a specific rule. I only get out when I have a bearish candlestick, or only get out when I see price is really pushing it far. For me, it's a bit more discretionary. Over the years, I'm able to kind of develop that style of my trading, where it's like more discretionary, but still based on how the market moves. And it's only a small part of the trade anyway. So the worst case it does is I'm going after the slightly bad level in profit anyway. And price will go more, and then I have other sides of my trade to keep it up from there. So good way to do it, definitely. So this is a good example, definitely on Netflix. So when you have price pushing it really far, like over here, this is really extreme, a good place to get out. You can also use, if you want to, use the Candle channel or any kind of channel that gives you a look at the price. You know, when price is getting to the top of the channel, we could adjust the settings here a little bit more. Once getting to the top, it's probably time to get out. So maybe I'll do a 50 here. Maybe I'll go over here and do a ATR 10. Let's see. We can play with these settings here, but make it in a way where we are able to. When over here, if prices reaches the top band, then it probably means that we are getting out of hand. We're getting a bit far in the market. So for example, on Netflix over here, you can see if we take a buy over here, when price reaches there, that's pretty much a good place to potentially get out because price could pull back, right? Or again, same thing over here. We took a trade somewhere down there. Now when price is over here, it's outside the band, probably a good time to get out. Price over here, again, a good time to get out or reduce your size in that trade. So that's kind of how it works. Either use your own perspective on things. You can look at the chart. It's pretty easy to do. It won't hurt your overall trade. It's just going to be a matter of taking profit to make it easier on your mindset, and also maybe maximize your profit as well if you can over time. You definitely get better at this stuff. And at the same time, you can use these bands or any other indicator that gives you a good view at the range to decide when to get out on these moves. So if you have any questions, make sure you comment below. I'll definitely be answering some questions and going over the comments. If you have anything you want me to cover in future videos, let me know down below. I do cover a lot of my training that's going to be based on trend trading. It's going to be the first link below. You can check it out, where we go in depth into how I use this indicator to trade, the trends, how I really write the profit, how I get out, more in details, and the setups to get into the market. So check it out. There will be a link below. Hopefully you get some value out of this. If you're serious about trading trends or writing trends in the market, you really don't want to miss this. It's going to cover a lot of stuff that it's just not talked about on YouTube that much. So check it out. And if you want to watch another video, watch this one next. You think you'll like it. And I'll catch you back here in the next video pretty soon. Ciao.